Alrighty, traders. Good afternoon, good morning, good evening, and welcome to the opening of the Forex market. My name is FX Big Dog, and we're going to go ahead and take a look and see exactly what's going on this evening as we dive into some trading opportunities. We take a look at what the market's really telling us and how we use the closing price of the previous day to determine what the directional bias is going to be for the next day. So we're really going to take a look and see what can we expect over the next coming days, and make sure, traders, that you are subscribed to this channel because we are going to be doing this every single day until Thursday. No, actually Wednesday. So it's going to be Sunday, Monday, Tuesday, and Wednesday. We're going to revise the markets to see what's going on. So with that being said, traders, tighten your seatbelts and let's get started. Alrighty, well, welcome back, and yes, we're going to go ahead and take a look and see what's going on. I trust everyone had a great weekend. I certainly did. I spent some time with my family from South Africa, and we had a good time. We really had a great time, and it's been a whole week that they've been here, and we certainly miss them, and we will miss them as they leave to Georgia for a week, and then back to South Africa. With that being said, I'm going to go ahead and dive into some good trade setups, or let's say some market analysis. And we can always start off with some news. And the reason why I go into some news just to see if there's going to be any sort of influence in price action this week. And as we dive into the calendar, I take a look over here on Tuesday, so at least Monday. Monday we started with ISM services PMI out in the US. Now, traders, I want to go ahead and say this, that a lot of you are probably saying, what's going on with the dollar? Because we've been seeing some bad data coming out across the board. And with the bad data, you would think that the dollar would be solid off. But the market's been in a spin since the central bank has said that they are not too eager to go ahead and start cutting rates right now, but also the fact that they don't want to push the market, or at least the economy, into recession, as if we're not there already. Well, some say we're not. But the thing is this, the biggest question here is what is the market going to do? And this is the thing that you have to understand, traders. As a technical trader, you have to understand that there is signs of price action move towards certain levels, which we call liquidity. We have sell liquidity and we have buy liquidity. What does that mean? That means that there are sell stops and buy stops at certain levels that price tends to move to. And price will create these sort of patterns, and these patterns will give us an indication of where we're going to go to before we see some sort of correction. We saw that with the Canadian Swiss. We saw that with the US dollar CAD as well. And those two pairs I'm going to go into a little more detail today. Both of those pairs we'll dig into, but we'll also go ahead and take a look at a very good friend of mine asked me to look at the Euro New Zealand dollar as well as the Euro CAD. So those will be my two bonus trades for tonight. I try to not to go through too many currency pairs and keep you guys for too long, but we're going to dive into four currency pairs this evening. That is going to be Euro CAD, Euro New Zealand dollar, and then of course the two pairs that I know that many of us are looking at, US dollar CAD as well as the CAD Swiss. So with that being said, traders, let's continue with the data. So the data out this week, we do see here we've got some cash rate right here. This certainly not going to play a big role on the pairs that we're paying attention to, but indirectly it's going to create some sort of influence in the market. And that's because you can see right here that the Aussies are keeping their rates unchanged as well. Well, that is the projection right here at 4.35%. That means they're following suit with what the Feds did this last week. They also kept the rates unchanged. Perhaps they're also concerned of pushing the economy into a recession. Again, the data is going to play a role as to what they're going to do next. We also spoke, in fact, there's also conversation around the Feds looking to cut interest rates in September. And this is the big thing right here. They're looking to cut, the consensus across the board looks like a 50 basis point cut. Now, this is really what gets to me. Why aren't they making small cuts as they lead to September rather than going with a 50 basis cut in September? If they're not really wanting to push the market into a recession, then why do that sort of thing? Listen here, guys, I hopefully I'm still connected here. I did get a notice right here that my connection is dropping. We do have some tropical storms here in Florida that is affecting the connection. So hopefully we can continue stream without any problems. So with that being said, traders, this is the thing. We have on Wednesday we've got some data. So we got Tuesday data coming out, cash rate coming out on Tuesday. We have some jobs coming out of the New Zealand for the New Zealand dollar, and that is also on Tuesday. And then we have, and that will affect the Euro New Zealand dollar. We'll take a look at that. As you can see right here, we're looking at numbers coming out worse than expected for New Zealand dollar. All these for the New Zealand cross. And then we got on Wednesday, we've got some speeches coming on Wednesday for the Aussie, as well as inflation expectations quarter on quarter for New Zealand as well. That's going to play a role too. And then as we continue for the week, you see at the end of the week here, we have jobs coming out for Canada, and that is going to be on Friday, which will play a big role on our US dollar CAD and our CAD Swiss position. Okay. That's good information. That's good stuff that we can sort of look at as we move towards the week. Now, let's dive into the technicals. And what I'm going to do is I'm going to dive into the US dollar CAD first. So, traders, first here is I go ahead and take away all the drawings out of here. Look at our weekly time frame. In fact, I can even go to the monthly time frame right here. It gives us a bigger picture. So actually, no, this is the weekly. My bad, not the monthly. But if I go to the weekly right here, let's just take a look at the bigger picture and see what's going on. And let me give you guys a little bit of a bigger bird's eye view on this. There we go. And so this is the thing right here. We can certainly see that there is resistance here, resistance there, and we certainly have now resistance up here at the top. Now, we can see that we have got support there. Yes, support right there. There's support. So what is the natural thing that we would be expecting on the US dollar CAD? Well, the natural thing that we would be expecting is price to go ahead and head back down south towards the bottom right here. That would be the natural thing. And so we are going to be looking for, over the next coming days, we are definitely looking for some sort of reversal patterns. All right, we'll start off with the daily, figure out some of the daily, we'll move to the 4 hour, and the 4 hour we'll probably go ahead and kick off with something that we can go ahead and trade. And that's the thing, traders. You've got to be able to have larger time frame confirmation before moving down to the lower time frame. If you don't have something confirmed in the larger time frame and you just traded reversal on the lower time frame, you're probably going to get a lot of false setups. All right. So with that being said, I'm going to pull in an indicator right here. Watch this right here. This is pretty interesting too. Notice our overbought conditions and oversold conditions. Notice how they line up. Here we have an overbought, price hits the top. Here we have the market in an oversold. What does the price do? Hits the bottom. Overbought, price hits the top. Oversold, price hits the bottom. Overbought again right here at the top, right there. And we see prices in an overbought right here again. So again, if you're using indicators to give us an indication of overbought, oversold, we're certainly overbought. There's no doubt that we're overbought right now, and that we're looking for price to dip back down. Once again, before making any sort of reaction to, or jumping at the market, we've got to take a look at time frame. What do we expect, or what are we going to be looking for? Well, looking at the weekly time frame, bringing in some technicals right now. This is this high right here. In fact, let me take away the technicals out for a minute. This high and low is the previous week. So that's the previous week high, previous week low right here. This is our weekly range. Now, if you didn't know, and if you didn't understand a little bit more about the power of three, it starts off with accumulation, manipulation, and then distribution. So we're in the accumulation phase on the weekly. Right now, we're anticipating this to be the accumulation right now. If this is accumulation, then we should be expecting manipulation to be on the upside before moving south. Now, I'm not saying it's always going to happen. This is the type of thing that we 95% look for. And to be on the safe side, we want to see that manipulation, because if we don't get the manipulation, what's going to end up happening? Price is probably not going to break out of this range. You're going to stay inside the range, just like we have been doing here. All right. You can see how price is just accumulating right here. All right. we need to see manipulation. We're not sure if manipulation is going to be this side or that side. We got to wait, right? But what we're looking for is manipulation. Same thing happening right here on this candle. We're looking for this to be accumulation, waiting for manipulation. And so I look at this and I go, okay, well, let's go ahead and mark off a couple of things here. And so I'm going to mark off this high, low right here. And you can see this high, low. This is coming from this last candle, the high, low from the last candle. Now, I'm going to move this now, and I'm going to change this to weekly range. This is not daily range. This is weekly range. Okay, we've got the weekly range top, and we have the weekly range bottom right here. All right. All right, so we've got a weekly range up there. Good. Now I'm going to drift this out to the bottom right here, making sure I got my weekly low and high. There it is. And now I'm going to move to the daily time frame. All right. So here is the daily time frame, and you can see the daily time frame is not too far away. This candle is not too far away from the weekly low. So what happened on Friday? Friday the market did break up, or at least gave us equal highs there. All right, didn't break above, but we got equal highs sitting over here. All right, so we do have equal highs. This high is sitting at 38.89, and this high is sitting at 38.86. So not quite equal, but very close. And so this becomes then, of course, our sort of indecision. Indecision is right there at the top. So we're expecting, because price didn't break above the previous high, this is given an indication that this today, the next 24 hours, is going to be a bearish move. So we're expecting a bearish move. Now, again, we could have this candle creating that manipulation first and then creating a bearish move to the downside. All right. So I'm always looking at this, and I want to prepare you for every possibility right here. And so manipulation is certainly something that's still on the table, and that manipulation could be to the upside. Okay. I want to say that for sure. Now, if I go down to the 4-hour time frame, all right, here's a 4-hour. If we're going to see reversal, all right, I would be very skeptical if the reversal takes place without the manipulation. Okay. Now we can look at the 4-hour right here. We can say we have seen consolidation right here. Here is price moving to the buy side of the curve, which means this could be our manipulation right here on the 4-hour. And that means if we do come back below right here, we're moving to the sell side of the curve. That means price is chasing after that support level. Now remember, this is only a 4-hour time frame, which means that once price gets down here, it may not mean that we are completely out of the woods when it comes to the larger time frame, which means the larger time frame is still looking for manipulation. All right. But we're going to be monitoring this. Now, this is what we're going to do over the next few days. We're going to monitor these setups. I do like the fact that we are seeing markets slow down, and that the only thing left is probably a manipulated move before price moves back down. We could move very quickly to the downside without that manipulation. And if that happens, that just means the larger time frame that we're seeing that's accumulating, it means that market's not breaking out. We're not seeing manipulation on the larger time frame. Okay, keep that in mind. We certainly see this on the 4-hour, but not on the daily or the weekly. Okay. Now, if we go to the lower time frame, like the 1-hour time frame right here, we can see a little bit better. There's that manipulation to the upside. Again, we want to see if price does go down, or do we see another spike up to give us that manipulation? And you're probably asking, Big Dog, why? Why would price want to break above here? Because you got traders out there, retail traders out there, that are hiding their stops behind this area. They're looking at the weekly time frame. They're saying, well, you know what? This is maybe a good place to start selling the market. And it certainly would be, all right? But I wouldn't use a stop loss up here at the top. I'd rather use some cost averaging. I'm not saying that cost averaging is the way to go. Some traders might say, well, stop losses is something to keep me safe. And sure. But the problem is, if you don't get into a trade when the market's confirmed it, and you get into the trade too early, then wherever you put your stop loss, guess what? The smart money is going to chase after that stop. You're going to see a lot of stop raids. Some of you may call it stop hunts, and that's what the market's going to do. It's going to stop hunt, stop raid, take you out of the market, and then you'll see the market move in that direction. So very important is timing. I'm not seeing the opportunity yet. All right. For those that are wondering, Big Dog, are you seeing the opportunity right now to start selling this particular pair? And the answer to that is no. All right. I'm not seeing the signs of the markets reversing yet. Manipulation is what I'd like to see first before I get too excited about a possible sell-off on this pair. All right. We still got to wait on that. So every day we'll evaluate this pair. Let's go to US dollar. Let's go to CAD Swiss. All right, here's the CAD Swiss right here. Now, CAD Swiss, we've had a huge amount of manipulation right here. All right, take a look right here in the daily. All right, we've seen, this is the thing. We've got a couple of things here setting up. Firstly, number one, let me go to the weekly. All right, so here's the weekly time frame. And FYI, if I take away the drawings right here, you can see a little bit clearer. Yeah, we can see that there was accumulation right here. All right. And this is the sell side of the curve, meaning that we're in a manipulation right now and we're absolutely looking for reversal. Now, this is the thing. If you look at this right here, you see how price moved down, started going up. Traders started getting very excited, maybe putting stop losses down here. You saw a big candle come down to this area right here. And that is price manipulation. That is stop rage right there. All right. Because traders start thinking, all right, CAD Swiss is on the way up. Let's go ahead and get in, tighten up a stop loss. And these are the stops that are being stopped out. When the price moves down with a big bar like this, that means it's just hitting stops on its way down. All right. It's happening. Now, do we see a reversal yet? Because some of you might say, well, big dog, is this nightmare over? Are we going to now see price bounce back up again? Well, again, we have to go through the steps. Don't try and pick the bottom. Let's wait for the bottom to come to us, which means let's wait for the confirmation first, right? And so as I go here to the daily, and I go now put some technical analysis in on here, and let's break this one down, we can see that we're looking for price to move to the buy side of the curve, but we've got to wait for price to go ahead and confirm that. Now, I'm going to be paying attention to the daily opens and closes. Here is the range of the previous day. Clearly, look at that big bad candle right there. That is a stop hunt right there. Clearing out stops, moving down south. What I'm going to look for right now is the new range. This is going to be my new daily range. There it is there, daily range. And so as I'm looking at this new daily range, I'm now going to anticipate price to show manipulation because this daily range is my accumulation. I'm looking for price manipulation and then price then coming back into the range and work his way back up. When I see manipulation on the daily, then only then it's going to be time to look for market structure shift, change of character, reversal patterns. All right. But until then, if the market moves back up, it's certainly not setting up an opportunity for me to want to buy it. It's telling me that, okay, maybe price is just going to sweep some highs, but it's not done with the manipulation yet. So I'm not convinced, or I don't have conviction yet of the market moving bullish yet. I know some of you like Big Dog. I'm sweating it out on this one. I'm feeling the heat on this one. I get it. I certainly do. And trust me, you're not the only one in that hot pool of water right now. All right. It is not a comfortable position. Anytime that you're in price manipulation, specifically when you have data being manipulated as well, and price is not only pushing in a direction because of data, but because of liquidity levels, all right, it does become extremely heated, all right, meaning that you're starting to feel the heat with regards to margin. You got to work your way out of this. You got to be able to manage yourself out of this, because if you don't, you're going to be out of the market and the market's going to turn on you and move in your direction. Now, again, do I have a crystal ball to tell you when this is going to turn? No, I don't. But I do have, there are certain indications that are going to give us that hint. Right now, we're not there yet. We're going to have to keep working on this every single day to review where the market's going. Right now, not time. All right, it's not time to break out the champagne. Not time to go ahead and pop that tequila shots, right? It's not time yet. We got to wait until we get that manipulation. If price moves up, that's going to be comforting, but it's not going to be what we should be looking for, right? Remember this, we've got to see manipulation in order for price to move. Now, if we go to the higher time frames, unlike the US dollar CAD, we have seen pricing manipulation, right? If you go to the weekly time frames, this move that we've seen to the downside is considered to be the manipulation. So which means the long term, we're targeting after much higher levels, all right? Because if this is a weekly manipulation move right here, then you just have to go to the larger time frame and you can see that, and there it is, weekly here. This is the top right here. So price is chasing off the 0.7900. That is the long-term goal for this pair. Write it down. Maybe in 1940, or sorry, 1940, 2040, you can text me and say, "Big dog, all right, I'm gonna my hearing aid, but you're gonna be texting me, big dog, we finally hit 7,900, all right." And so yes, it may take us a long time to get 7,900, but the thing is, that is the target. All right. Now we got some short term targets here, and it's sitting at around about 68.30, around about there. Those are the short term targets that we definitely in our lifetime, and I'm saying again, in our lifetime, we will see 7,800 come into play. All right. Once we get through this manipulation, then we earn distribution. And once we're in distribution, I am going to, I'm just letting you guys know that I am preparing myself that when we move out of this manipulation and we see the reversal and we're in that distribution move on the buy side of the curve, I am going to be adding into my position. So I'm maintaining good margins. I'm trying to keep my margins available. I'm going to make sure that I build up more margins and put more funds in if I have to on my own trading accounts. Because when it gets to that point, I want to be ready to start adding in so that I can get to 68.30 with vengeance. And I'm not that I'm trying to venge the market, but I'm certainly going to be aggressive so I can get out of this position as fast as possible, because we've just realized that the CAD Swiss, although it's nice to be able to trade it for short-term profits back and forth, but once it breaks out of these moves, it takes a long time to get back, especially if we're on the wrong side of manipulation. And that's the key right there. Okay. Now, traders, I want you to hold on until the end of the video, because I am going to talk to you about, for those that are following my trade ideas, I'm going to give you a very clear understanding and very clear sort of guideline of exactly what am I going to be looking for moving forward on trade ideas. All right. Because you've probably noticed that you haven't got trades on the Aussie CAD. You don't have trades on, so not the Aussie CAD, on the Euro US dollar. You don't have trades on the New Zealand CAD. So you don't have trades on those two. And I'm going to talk a little bit more about that towards the end. So hang on till the end. Okay, let's go into. All right, so we all know that we're going to be paying a little bit more attention to this pair as we go day by day. And traders, over the next few days, I'll be doing live sessions just after the close. It could be anywhere between 6 o'clock to 8 o'clock in the evening, Eastern Standard Time. I will be diving into the market setups, diving into the daily time frames, and giving you exactly what I'm seeing and how we should be taking action when time is ready. All right, let's move on to the bonus trades here. This is the Euro New Zealand dollar. Now, for those that don't know, here is a little hint of what I'm going to be talking about towards the end of the video, right? If we take a look over here, we have accumulation, we have manipulation, we have distribution. Now, just as you know, this is the daily time frame right here, all right? So it gives us a warning that price is accumulating. We're looking for that breakout. We can trade this breakout. What does the market look for? It looks for liquidity levels down here. Once we hit liquidity in manipulation move, what does the market do? It reverses. It reverses, and then it moves back to our draw of liquidity, which is possibly, well, not possibly, it is going to chase after the accumulation highs. All right. Now, this pair right here, where is the new Euro New Zealand dollar going? Well, this whole phase right here, all right, these phases are complete. The power three is done on this. And so we've got to look for then new setups, all right? And so what new setups do we have? Well, let me go ahead and compress, all right? Here is the larger picture, okay? So you can see here that we did have a power three sitting over here, all right? There it is. That was the model that we were trading. But there is bigger models sitting up over here. Here is the big model right here, all right? So if we're in this big model, we have to understand that we're in large consolidation, all right? Which means that we're at the top, we're at the bottom. We went halfway to the top, came back to the bottom to take out liquidity here, and then we moved back to the top again. What did we do? We took out liquidity once again. All right, so where is our liquidity areas? Let's go ahead and clean up here. Let's pull up the stops right here. Let's break this one down. So we're going to keep that there. We've sweep that high. We're going to remove that out. We're going to take all of this over here out. Okay, let's clean up house here. All right, let's smoothen out here, right there. And you know, it's probably better that I just do this. There we go, clean up. All right, so we've got a nice clean chart right here. Now let's go ahead and mark off some liquidity areas. Here we go. Boom. Let's go ahead and actually do this. Let's put up here. So we've got buy side liquidity over here. Let's go ahead and mark off some sell side here. This is a sell side liquidity level right here that we want to pay attention to because price has not swept that yet. So we've got some sell side liquidity down here. All right, so that's all we need now. And we can see there's a range forming right here. And now what we want to do is we want to go, okay, prices come to the top right here. We see equal highs right here. It hasn't quite swept, not that I can see. But we're going to equal highs. And so we're going to dig deeper into here because where we're expecting price to move to. We're expecting price to move down here. All right. Now let's look at the internal structure. If price is going to move down, we want to see a reversal here, number one. Number two, we want to see where is price moving to. Well, here is, if we got a reversal here, it's chasing off the liquidity. Here is the liquidity right here. So price is looking for 73.88. Now, if we are going to see an internal move, which means the turtle soup, to sort of like creating like this, if we see this happening, if price doesn't break through structure right here, if we don't see a break of structure here, then we see a reversal, prices coming over here to sweep this high right there. And then when it sweeps that high, then only then we will go back down here. Okay, so this is still a concern that price is going to move up to that before we move down to here. We're going to keep an eye on the reversal and we're going to sell it. So right now, I'm looking for reversal. Moving it down to the 4 hour. So here's the 4 hour right here. Okay, now if you look at the 4 hour, let's take a look and see what we've got here on the 4 hour. Now we're going to pull up some, yes, highs up here, but look at the low right here. See our price, let's just kill it. See our price sweep the low right here. All right, so price sweep the low right there. Nice little sweep. And then what happened? Well, we're going to call this our market structure shift right here. This is where market structure shift. Let's change it to this one right here. All right, so we had market structure shift, which means we've broken that low. And therefore, this is now our downward swing. All right, so we can look at this right here and say, okay, we're looking for price to reverse. And we want it to reverse back up to sell side liquidity. So I'm going to pull up the daily right here. I'll probably see it better on the daily. And I'm going to look for insufficiency. Very important right here. So I'll look over here on the daily and I'll see that we have a little bit of insufficiency sitting over here. Okay. That is going to be my daily. I also see that we have this big, well, not really. Yeah, we have this order block sitting over here, but this is what I'm looking for right here. This is a daily fair value gap. Let's go ahead and mark it off as a daily fair value gap here. And right here, fair value gap. All right. And so what I'm going to do here is in this region, now I'm going to go down to my 1 hour time frame right here. And now in order for me to look for a trade on this, I got to either number one, all right? Number one, getting on the trade right here with stop losses above here, because the market does raid the stop. If we and by the way, that's my liquidity draw right here. So I'm expecting price to draw down to that period. Now I can put my stops right here, or I can tighten up, put my stops above the fair value gap, or I can look for a reversal here on the 1 hour. So let's go to the 1 hour. Let's take a look and see what we're looking for right here. On the 1 hour, to confirm the turning point here, let's go ahead and once again look for lows. There it is there. All right, so there's the low that I need price to sweep below, right? And that'll be the confirmation that I'm looking for when looking to sell. So as I watch this on the 1 hour, that's going to be the break right here. Now, when I do see the break going through here, I want to see good displacement below, and then I want to see price come up to insufficiency. Then in insufficiency, I would like to go ahead and sell. I want to put my stop losses above right here. Okay, that's taking down a sell. Now, you might say, well, Big Dog, what about using cost averaging? Yes, you can use cost averaging, but then you have to understand that if price breaks through this level, all right, if we have price doing this, and it comes back up here and you start cost averaging right here, and then price continues to move through here, if this doesn't hold, price is going for that area right there. So you got to be prepared to say, oh, well, I'm going to hold on. Even though price takes out this high, you're going to hold on up until that point because your larger target is much further down. So all you're doing is really building up your position. All right. That's really what it comes down to. All right, so this is what I'm looking for. So over the next few days, I'm looking to see if I can get some market structure shifts. Probably going to get a little bit more attention here as the daily goes ahead and also confirm. So also I'd like to see here this daily range right here. We can mark off the daily range, and it's going to come off that high right there. And I'm going to call that my daily range, sitting up over here. And let's go daily range. And why is your daily range important? Because your daily range could be the start of a accumulation, right? Daily range could be the start of accumulation. And so looking at daily ranges, it helps you also to confirm your reversal. And so you want to see that power of three move setting up right there where you're looking for price to do something like this. All right. Looking for price to go ahead and manipulate above there. Look at this. You see, here it is. Here's your manipulation. If price comes back below by the closer here, we're heading down south. Now, traders, you could do this. You could wait for the data to close and confirm manipulation and then pay attention to the 1 hour, because what's going to end up happening on the 1 hour or the 4 hour is that price is going to be down here. This is going to confirm the manipulation on the daily, and then it's going to go ahead and say, all right, now we're going to look for the retracement, and this is where you're going to look for fair value gaps or insufficiencies to go ahead and sell. So getting the daily confirmation and then going to the 1 hour time frame might be a good process to follow. All right. So yes, am I expecting the Euro New Zealand dollar to sell off? Yes, I am. Am I waiting for confirmation? Yes, I am. Okay. Last pair, Euro, Euro New Zealand dollar right here. Let's take a look at the Euro New Zealand dollar. We've got large accumulation right here. What happened? Take a look here. See how price swept the high up here at the top? This is the liquidity grab that price was looking to grab right there. There's your liquidity right there. Let's go mark it off. This is going to be my buy side. So I've got buy side liquidity grab right here. This is the manipulation through. We can also see right here that we've had some accumulation right here. We had this is short-term manipulation. And so we're now looking for price to come back to retest this area and maybe possibly reverse and stay inside the large consolidation. So what I'm going to do here is I'm going to look for downside liquidity. All right, let's go here. This is going to be my external. All right, this is going to be external liquidity down here, sell side external liquidity. We're still paying attention to this accumulation because price, if it does break above and come back in, we're heading back down to the bottom. We've got, let's see if we can pick up. Here is internal liquidity right here. Okay, so this is going to be our short-term target right here, as well as this right here, and that'll create a reversal. So the reversal is going to come off that. That's going to be our sell side short-term liquidity level or draw of liquidity down there. And this is where we can look for price to come back down. So now we're going to go down to the 4 hour. And there we can go ahead and read this a little bit closer up. Yeah, we can go ahead and put our accumulation in here. This is the accumulation that price was building into. So if I go ahead and do this, and by the way, I told you hold back until the end of the session, right? This is the time right now that we're going to talk about what we're going to do moving forward. These are the type of setups that I'm looking for. So yeah, we have accumulation. We see price now moving to the buy side of the curve right here. Buy side of the curve above accumulation is our manipulation move. And then we're looking for the market to then go ahead and move to the sell side of the curve towards that target right here. That'll be our sell side of the curve right there that we're looking for. We don't have the sell side confirmed yet. So currently right now, we're still in the manipulation move. This is a 4 hour time frame. To look for that manipulation, you don't have to just use the 1 hour. We can go to the 30-minute time frame. We can go to the 1 hour time frame right here. And we can look to see when are we going to see a reversal. So let's take a look here. So here's a low. This is what we're probably going to be looking for right here. All right. This, in fact, let's do this. Let's pull this up like this. And all we're really doing is trying to set the directional bias. So we want to see price sweep the low right here. We want to see deep move through this to give us that displacement below, and then we want to see price come back up to fair value gaps. If I don't have fair value gaps or insufficiency on that, I probably won't trade it. And the reason why I won't trade it is because if there's no insufficiency where price can go pull back up to, then there's a possibility, a high probability that price is still going to go ahead and sweep a new high before heading back down south. So we want to see insufficiency in order to be able to use that as resistance to sell off resistance as price moves back down. So the concept of us selling resistance and buying support is still there. All right. All we're doing now is we're going into a lot more detailed analysis rather than just look for support and resistance and trading aggressively. Based on the more conservative approach would be identifying the directional bias, then looking for confirmation, and then once we've got the confirmation of the bias, then we can continue to trade in that direction. So this is pretty much where I'm at right now with these four pairs. We're going to continue to review this every evening. So traders, with that being said, thank you very much for your time. Appreciate everyone. Smash the like button, subscribe to the channel, and I will see you guys in the next session. This is FX Big Dog wishing you peace, joy, and successful trading. Until next time, happy trading.